Good morning, good evening, good whatever time it is you're watching this. I'm Dave with Cups and Handles, and in this quick market recap, we're going to break down today's SPY price action, identify the key technical levels that matter, and discuss what I'm anticipating for the next trading session. We only have a few minutes, so let's jump right into the charts. Hello everybody, welcome to today's market recap and next day analysis. Now, I am not feeling super well. I did have minor surgery, so we are going to get through this pretty quickly, all right? Now, going over the daily time frame on the SPY, as always, let's just kind of go over the last couple sessions. Is that last week we had the upper Bollinger push. So we had the close above the upper Bollinger day one. The next day we generally expect, and as always it is back tested, to see a second day higher high. We got that. Now from that, and I've been talking about this for a few sessions now, that we should be seeing this 5-day moving average consolidation to the downside. Okay, now that's largely what today was. The 5 mile is currently at, sorry, I got all my buttons mixed up. The 5 mile is currently at that 771.04. I believe it was at the 770 88, something around there, earlier within the trading session. So currently at the 7071.04. Okay, well, let's look at the price action for today. We see that with that 771.04, that gives us the upper bounds and lower bounds. Again, we try to set that range about $1 to $2 above and below. So let's see, 771.04, that puts 773.04 to the top, roughly in that range. And that would set the 768, or excuse me, it's 769.04. So right and there. Now, does that look like a 5 mod test? Sure does. And we talked about this in last night's video, that generally the market tries to set the 5 mod, which is a very neutral range. It's basically our closest support, right before a major data set. And what do we have in the morning? We have the CPI data. So that's going to be a very major data set for the market. There's a lot of different speculation behind it. I know I don't check Kalshi bets and everything because I don't believe in those betting programs. If you do, that's great. But I think gambling should have been, you know, needs to stay in Vegas and stay with the casinos. But with that said, the expectations from the forecasters are saying that the CPI will still be coming in cooler. Okay, now let's look at our hourly time frame here. We can see on our hourly time frame, we've broke from that buying channel. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. And this break from the buying channel can allude into a selling channel starting to form, or even a consolidation channel starting to form. But we're not at that point yet. Again, tomorrow's data is super, super important. If we do have a bounce to the upside, the expectation again is cooler data. Cooler data does usually align with equity prices moving upward because again, the dollar will be moving down, the treasury yields will be moving down, and the expectations of a rate hike will be heavily moving down. So if we get the cooler data print, it's very likely that we will be expanding this buying channel. Something, like that. Okay, and very likely it'd actually be the support right there. Well, resistance. Always label it the wrong way. And then start heading back up. Okay, and from heading back up, we could target some of these resistances that are above us. Now, I haven't marked out today's resistance, but it's basically that 774, like 95. Okay, that's the next major resistance range. And then above that would be that 776.85. From there, we can push up back into the daily upper Bollinger. Now the upper Bollinger is currently at the 780.38. But if we do have a cool print tomorrow, I think it's very, very reasonable to see the market push up towards that range within the next 2 to 3 sessions. I don't think that'd be unreasonable at all. But if we get a hotter print, then what would happen? We would then see our buying channel very likely be broken, like it is currently. Oops, I don't want to grab that. I had this back in here. We would see this channel broken, and very likely, again, the formation of a selling channel or a consolidation channel. Now, it's been a long time since we've worked with a consolidation channel, but a consolidation channel basically just means heavy, heavy sideways trading. Okay. I don't think we're at that point in the market. I think that because we have pushed up so heavily, we're at the point where we're either going to be seeing major selling or major buying. Okay. And the expectations are kind of showing that as well, because if the CPI print comes in hot, that means that the rate hike is very much on the table. Okay. Currently the odds are very, very close to 50-50. So if we get, I continue saying this, but if we get a cooler print, that's going to shift to where the pause is going to be much higher. If we get the hotter print, then that's going to shift to where the hike is priced in much higher. Now, if we do get the hike getting priced in higher, that's going to cause the dollar to pull upward. It's going to cause the treasury yields to pull upward, and very likely we will be selling off quite hard. Okay, now some of our downward supports we have to target are the 770.20. Yes, we hit that today, but that's still in play currently. The 768.04, definitely in play currently. And all the way down to the 758.11. Now, this might seem like a very large selling range. However, if the odds of the rate hike are starting to get priced in further, we can see some massive selling. And just going over the last few months, each time we've had this massive selling occurring has generally been because of the odds of the rate hike have increased. Okay, especially this selling in here. Now, if that starts to jump back up again, a lot of this buying we've seen on the SPY over the last, let's just say, 2 weeks, can entirely be wiped out. Now, I'm not going to say that's going to happen all in one session. I think that'd be, absurd. But we could definitely start forming that downtrend again. Now, seasonality tells us that we're within the season to start seeing major selling. Okay, so even though the expectations and everything else are overall, we're going to get a cooler print tomorrow, we just have to be very open-minded. And that's why the market closed where it closed today. It closed at that five-day moving average because that's a very neutral range to close at. It gives us the range to either pull back up or to start pushing back down. So that's really the expectation right now, is that a lot lies on that CPI print, but we know our targets to look for. Okay, we know that we could potentially rally all the way back up to that 776, 85, potentially above that. If that starts to occur, this buying channel expands and we'll start traveling up the buying channel again. If we get hotter print, this channel that's already been broken, we'll know for a fact that it's broken for a good reason, and very likely start forming a selling channel. And we know the supports to start targeting. Primarily, excuse me, that's 768.04 and that's 758.11. Okay, that 758.11 might seem very far, but a $12 move on SPY is not completely unheard of currently. We have seen that type of price action over the last 2 weeks. So it's absolutely within the cards currently. So with that said, I hope everyone has a great night, great day, trade safe tomorrow, and I will talk to you in tomorrow's video. So take care, everyone. Thank you so much for watching, and I appreciate each and every one of you. So take care. That wraps up this market recap. If you found the analysis helpful, please take a moment to like the video, leave a comment, subscribe to the channel, and share it with someone who would benefit from these daily market breakdowns. It really does help support the channel and allows me to continue creating free educational content for everybody. As always, have a trading plan before you enter a position, manage your risk, and remember, we're not trying to predict the market, we're trying to prepare for it. Thank you all for watching, and I'll see you in the next one.